afternoon, good evening, traders from across the globe, and welcome to the 841st edition of Short-Term Trading Live with Oscar. Hello, ladies and gentlemen. My name is Oscar Carboni. I am broadcasting to you from my New York City office. Traders, this video is being filmed on Sunday night for trading Sunday through Monday. That would be March 19, 2012. As we all know, futures trading can be extremely risky and can cause substantial financial loss. If you do not recognize that stops are your best friend, if you do not have risk capital to lose, you should not be trading in the futures arena. But for you cowboys that are out there that understand the risks and like to play this game, you need to know this. Repetitive patterns are the cornerstones of accurate technical analysis, baby, and that is the absolute truth. I am about to show you some charts. You will absolutely see a repetitive pattern. These charts are of U.S. indices. OMNI is green, baby, green OMNI. Gotta love that green OMNI for Sunday through Monday in U.S. indices. The OMNI sees the market as if it dips, you buy into that dip, and that's what OMNI wants to do Sunday through Monday. And if you've done your analysis, you may want to do the same thing. Traders, you're going to like these charts. I'll show them to you in a moment, but keep this in mind. We've been in a bull market. It's been going strong. If it pulls back for a day or two, that does not turn it bearish. That's usually a buying opportunity. So we are bullish. We are looking to buy the dips. Now, I also mentioned to you just recently, in the last 8 days, I've been telling you that it looks like we are calling top in bonds. Traders, the market has absolutely started to break down in bonds. It looks like a big rounded top. I think OMNI's right for making this call. Since we've made the call, the bonds have broke over 5 handles, and we think it's going to break further. Nothing goes straight down. Bonds will go down, pop back up, go down even harder. Traders, understand this. For the last 3 years, the Fed has been buying bonds like crazy. Everyone knows that. Fed was bond friendly and bond funds poured trillions of dollars in. That money now is slowly starting to come back out of the bond funds. Where do you think it goes when it comes out of bond funds? There's almost no other game in town left but the stock market. Real estate's slowly coming back, but that's not where you throw your money looking for fast returns. Right now, it appears to be the stock market. As money pours out of the U.S. bonds, it will go into U.S. stocks. Get ready for it. Traders, if you like the analysis I'm about to show you, I'm going to show you some charts now. Come on down to livewithoscar.com. Jump into my free trading room and allow me to help you understand the art of technical analysis. And when you become a better analyst, I assure you it will help to make you a better trader. Come look at the charts, traders. Traders, a theme that you will find repetitive, something that I have shown you time and time again, and something that you need to pay attention to. This is the Russell. It is a daily bar chart. Note the inverted head and shoulders here, then the rally. Another inverted head and shoulders, major rally. Here we are with an inverted head and shoulders. I expect another rally. This is your Russell 2000. It is finally starting to break out towards its previous highs to make new highs, and I think it will do that. So, repetitive patterns are the cornerstones of accurate technical analysis. I have said this to you many times in the past, and I have proven it to you by showing you a video with a chart, and you see it happen the next day or the next few days, because technical analysis is a very, very strong tool. So that's the Russell. One pattern, it rallies. Same pattern repeats itself, it rallies. Third pattern looks like the two before it. A rally should ensue before this pattern completes. So that is your Russell. Let's go take a look at the NASDAQ. Here's your NASDAQ, traders. This is the NASDAQ daily bar chart. It is in a very bullish looking channel, and a secondary channel has now emerged. The market is respecting that channel and will very likely make a try for the 2765 level at some point this week. That is something we do expect to see. And as you can see, if we simply stay inside of this channel, we can very easily get there. Many of our technical indicators are quite bullish. Plus you have this major channel that we've been staying in. The NASDAQ has been leading this bull market all the way up for the past few weeks. I say the NASDAQ continues to move ahead. We are looking to buy the dips again on Monday. Let's look at another chart. Okay, traders, the E-mini S&P daily bar chart, like its leader, the NASDAQ, it has a huge channel, the primary channel. It's working quite well, very bullish. Now we have a secondary parallel channel. This looks very bullish, just like the NASDAQ. If the E-mini stays inside this channel, you can very easily work your way to the top of the channel, or the 1426 to 30 level, which is something that we think we will see this week if the bulls want to continue buying, and it looks like that is the case. The leader of U.S. indices, which has taken a back seat to the NASDAQ lately, but we know overall it is the leader of U.S. indices, is the Dow Jones Transportation Average. Let's go take a look at that. All I can say when I look at this chart of the transportation average on a daily bar is go, transports, go. Look at how it's broken out of this channel and has broken out in a very nice fashion. Now we are up here. Traders, this market is taking out its previous highs, and the NASDAQ has pulled the transportation back into action, and the transportation average looks like it will lead us moving forward. Right now we are definitely going to use the NASDAQ as a leader, but you could very well see this being a leader in no time at all, once again taking its leadership qualities. So there you are, you have the transportation average. Now traders, here's an interesting look. I think you're going to like this next chart. Okay, traders, here we are looking at the June T-bonds, the daily bar chart. About 5 to 7 days ago, we told you we were basically calling the top in T-bonds. Omni is just about there, ready to call it. Within the next day, we actually put out an Omni calling for downside to come in bonds. Look at what has happened since then, traders. Down, down, down. We do have a rounded top, it seems. And look at the 200 bar moving average. We are now below it and testing it from below. So if it fails to get back above the 200, then the bonds continue lower. And traders, whether you know this or not, bonds moving lower will absolutely propel the stock market higher, because tens of billions of dollars in bond funds will have to come out of bond funds, as they're beginning to do now. And the only other good game in town to put it in is the stock market, which brings us back to this picture. Traders, remember this: repetitive patterns are the cornerstones of accurate technical analysis. Here is living proof. Inverted head and shoulders, rally in the Russell. Inverted head and shoulders number 2, rally number 2 in the Russell. Inverted head and shoulders number 3, this is very likely going to be rally number 3 in the Russell. Repetitive patterns are the cornerstones of accurate technical analysis. Okay, so you've seen the charts. There's my technical argument for why we are buying the dips once again in U.S. indices, and we are now beginning to sell rallies in the U.S. bonds. Traders, the soybeans are also looking pretty smart. We've been trading the soybeans a lot lately, and they are looking pretty good. Look at your soybean chart. We expect the soybeans to continue to work their way higher. Traders, thank you so much for watching my videos. This was video number 841. I'll be back in my Vegas office in just 2 more days. I can't wait to get back there. But until then, I will be in my chat rooms. I will be helping you see through these markets, and I will continue to put out my videos. Traders, remember this. Try to always keep your emotions out of trading. One of the best things you can do to help yourselves with that is say this to yourselves every morning, every afternoon, every evening, and you know what that is. Stops are in. Emotions are out. Yeah. 841. Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided.